What's going on, good peoples? What is going on? We are live tonight. We're going to be discussing a major topic, and it is the struggles of first-time home buyers. We're going to discuss struggles that first-time home buyers are going through. If you're new to the channel, do me a huge favor and give me the like button. Push this out to the algorithm so it reaches a ton of first-time home buyers or home buyers in general. If you are a first-time home buyer or home buyer and watching this live, drop your question in. I've got a question. What are your struggles, or what is your struggle with owning a home today? We're going to go through some. We're going to do some of the topics. We'll be here to answer your questions, give you some insight, give you some tips on how to potentially overcome those struggles, and we're going to have a good night, good live tonight. In the meantime, I am going to plug my home buyer's journal. So this home buyer's journal will walk you through the process of what you potentially need to do of purchasing your home. It will allow for you to journal the journey, right? So you're journaling the journey through home ownership. It is $19.99. You can find it on my website, www.peopleslender.com. I will put it in the chat. It will also be at the bottom in the notes section. That journal has helped numerous clients of mine who said it gave them an opportunity to jot down different parts of the process, to jot down different things that they need, that they want to try to remember. And just actually, some said they listen to the live to take notes on different things that I say, or if you're talking about homeownership, take down different pieces of information that they are. So again, the link will be below. It's $19.99. It's a great investment. And for those who have purchased it, thank you for those of you who are purchasing it, thank you for your support as well. So let's get into it. So let me pull up an article. So one of the articles that I was reading said that home buyers are dealing with struggles. And one of the biggest struggles is seeing a home that was once $150 and now it's $350 and $1,000. So that is that's a mindset, and you'll potentially need a mindset. So if you saw something for one price, and then years later you now see it for another price, and let's say it hasn't had any upgrades or any roof, no air, plumbing, it's the same house you may have saw less than 15 years ago, and now all of a sudden it's $300,000 more. That is going to be a hurdle that you have to overcome, because in your mind it's like, hey, why am I going to pay for a house that's $400,000? I've seen it for $150 before. So that's called equity, and that's called the growth of the market. So let's look at it from a different perspective. Let's say you purchased that home for $150 when you saw it, let's say 15 years ago, and now it's $450. Then that's equity that's grown. That's the real estate market increasing in value, and that is a good investment. It's a good investment if you purchased at that time. If you didn't purchase at that time and now it's $450 and you don't want to do it, just imagine 15 years from now when that property could be worth $600,000-$700,000. And if you decide not to jump on that opportunity now, then if you're looking again in that time frame, you're going to say, hey, I remember this house was $150. Now all of a sudden it's $700,000. So that's one of the biggest struggles that first-time home buyers are looking at. A lot of people are saying, hey, it's interest rates. Interest rates have a lot to do with what the payment is, but at the end of the day, right now, interest rates are what they are. you know, potentially firing Powell, reducing interest rate, so mortgage interest rate problem. So I'm not sure if that will work. Well, Kevin, we can't afford to pay a $2,500 or $3,000 a month mortgage. The ultimate thing is when someone's looking for a house, no one really wants a mortgage. They really just would like, we could get the house for free and not have to pay a mortgage, then everything would be all good. But there is a price associated with purchasing a house, and I still firmly believe that owning a home is a great investment. Now, you have to be set up. You have to be in position to be able to purchase the home. You have to be financially ready to purchase. You can't be maybe I'll purchase a home, or maybe I'll purchase a home because it's the thing to do. Like purchasing a home is serious business. It is very serious. It's a very it could be a very stressful process. But to me, I always think it's worth it. I talked to a realtor partner of mine. We helped a family who did not think that they could purchase a home. They came to us in October of 2024, uh, not knowing whether they could be homeowners. I had a consultation with her and her husband. I was able to pull their credit, and they needed some work. They needed some work on their credit. I sat down with them. I gave them a detailed game plan on what to do to help increase their score. We followed up with each other over the course of months. However, they were delaying the process. They were afraid that, hey, if we pay this bill now, can you get us qualified? And I'll never forget, I told Kevin Jefferson, if you follow what I ask you to do, I'll get you finished. That's all I ask. If you do what I ask you to do, I will make sure you get finished. So time went on. They worked on their credit, paid down the bill. They identified a property. They went under contract. One of the properties that they loved just went under contract as I got approved. Just went under contract. A little discouraged, but I told them, hey, what God has for you for your family, so you and your. So they went out on a search. They went on a search. They found the property, and they went under contract. Now, during the process, we still had some hiccups. We still had some hurdles. There was things that popped up that we weren't aware of, but we navigated through the process. Fast forward 9 months later, they settled on their house yesterday as of um, July 22nd, 2025. Today, 23rd, 2025. They closed on their home yesterday, and the realtor told me, Kevin, she cried the entire moment. She cried tears of joy because they said they never expected to purchase a home. They never knew that they could purchase a home. I had numerous conversations with them together, and I finally got the wife on board to say, "Hey, we can do this. Like you're there, you're there. Just execute these last few steps, and I promise you, I will get you there if you do it." And so I had the wife on board. The husband, he was still skeptical because he had never owned a home before. He just, he wasn't sure of the process. So, we had numerous conversations. And at one point, he said, "Hey, man, I just want to rent." I said, "For what? In 30 days, you'll be still looking for a rental when you can get a house." So I talked him off the ledge, and they closed. They closed. They're happy homeowners. I spoke to them yesterday after closing. I spoke to them today, and they said, "Kevin, we really did not think we would ever achieve this goal of homeownership. And if it wasn't for you and Katrina Hall, who's the realtor, she said we could not make this. This couldn't have happened." So she came as a referral from another client that I closed on a home for with her, and she told her, "Hey, if you follow the game plan that they give you, they will get you into a home." And we kept. So mindset is a struggle. First time home buyers going from a renter's mindset to a homeowner's mindset. That is, I can't I can't make that happen for you, right? I can educate you on the process. I can answer your questions, but at some point you have to make that shift for yourself and turn mindset from a renter to a homeowner. Understand, some people don't want to buy because they now have the responsibility of being the person that has to fix the toilet if it breaks, have to replace the refrigerator if it breaks, have to get a roof, paint siding, paint the house, like do different things. So you're now a homeowner. So the alternative to purchasing a home is obviously renting, right? Now, renting, a struggle first-time home buyers are having is the increasing rental rates. So what they're saying is, hey, my rent continues to go up, so I'm finding it hard for me to be able to save to purchase a home. So that's a real struggle. Like if you're not in a position to buy a home, your rent's increasing every year. When it's time to renew your lease, it goes up depending on where you are. It could go up 5%. It could go up $100. It could go up $200. Your rent typically is going to go up. So at that point, now you have an increased expense, right? Your rent has increased. Let's say it increased $200. Now that's $200 more a month that you're paying towards rent. Um, so that could have been $200 more that you could have put down as a savings in order to purchase a home. So, like, not having funds to put down on a home in terms of down payment, not having funds for closing costs could be another struggle. So, in those instances, you really have to look at a budget. I think you've got to, if you truly want to become a homeowner, you're going to have to sacrifice something. You're going to have to sacrifice vacation, possibly. You're going to have to sacrifice going out, eating out all the time. It could be a sacrifice of, hey, I need to work overtime so I can save more money, or I need to pick up some type of second job so I can save more money. So the other thing, it doesn't have to be. It could be a temporary position. Um, it could be Uber Eats, it could be Instacart, it could be mowing lawns for the summer. It could be hauling trash if you have a pickup. It could be one of your talents. Let's say you have an eye for design. Somebody wants their house cleaned. Maybe you go into that. But there's different ways saving funds to help you along that journey. So if you guys are just joining, we're talking about struggles that first-time home buyers are having in 2025. Definitely a different type of time. Inflation is up. Price of everything has gone up. People are not getting raises as they suspected. People are losing their jobs. And at the end of the day, I always say, as long as you live, you have to pay for something. So why not take the opportunity to try to become a homeowner? Another struggle that first-time home buyers have is applying. You are watching me every time I put out a video. You're watching, she puts out a video, or Matt Garland or someone putting out a video, and you're taking notes and you're getting the good information, but you're afraid to make that step of, hey, let me apply to see that. That's the only way that I can help you is by you applying so I can see what you're working with and how we can create a plan for buyer A or buyer B to be able to get into a home. So the biggest struggle is applying. Now, in terms of credit challenge, if you are credit challenge, we can give you a game plan. If you don't have any credit, I can give you a game plan to establish credit. If you're not sure what your do what I'm telling you guys to do. Go to annualcreditreport.com and pull your credit. It's not going to give you a score. It is going to give you what's on your credit. Invest, go to Dollar Tree or get your kids crayons and then invest in highlighters or crayons so that you can underline or mark things like maybe green and say this belongs there. No, it doesn't belong there because you want to know what's on your credit. You want to know if there's any inaccuracies on your credit. And I'm not telling you, please listen to me. The first thing you do is not to dispute the item. It is not to dispute the items because when you dispute an item, it no longer typically no longer negatively affects. However, when you come to me and I pull credit, I'm gonna ask you to remove it because the underwriter, when we get to that point, is going to want to see your true credit, and your score could instantly increase because you have now um, disputed an item and you have what I call an inflated score. So some of the struggles, another struggle for first-time home buyers is credit. Check your credit. Make sure that whatever's on there belongs there. If it doesn't, research it, figure it out. Credit repair is an option at some point, but it doesn't happen instantly, happen easily. And there's a reason why some people get paid for credit repair because they know what they're doing and they will quote you time. If anybody tells you they can get something off your credit and it's a major credit item in 60 to 90 days, I would probably look another way because just shooting an item, letters, the forms you see on the videos, that's not instantly going to remove your items. In some cases, it does, but if you know it's your bill, why, why are you disputing? I see a ton of people, were disputing that knowing that they went to school and got the degree. So people are disputing stuff. Excuse me, I had too much here. People are disputing things that belong to them, and that is not a quick fix. And just understand that if you have done credit repair and you have disputed items on your credit, you're going to need to call the credit agency to have those removed. If you have done credit repair or you try to repair your credit yourself and the items were taken off, that does not mean you do not owe that bill. It just means it does not show on your credit. So take those things into account. For those of you guys out there listening, uh, do me a favor, chime in. What are some struggles that you're having with the first time being a first time home buyer or being a return home buyer? So the IRS says a first time home buyer is a person who has not had owner interest in the property in the last year. So if your name on a property, let's say you had a property and you sold it in 2024, that's 4 years ago, you have not owned the property since, you are now considered a first time home buyer for the IRS. Now check with the state that you're in because I know in Georgia, they go for it. Maryland, North Carolina, like a lot of states go for it. The great state of Delaware does not go for it. Once you purchase a home, you are no longer considered a first time home buyer. I think the rule is like that because we already have something called transfer tax. Typically, transfer tax, well, in Delaware, transfer tax is percent of the sales price. So if it's a $200,000 home, that's $8,000. 4% paid by the buyer, 2% paid by the seller. That Delaware collects that transfer tax. The county that you live in collects the transfer tax, and then a portion goes to the state. If you're a first-time home buyer, they typically waive it, and you only pay a certain percentage, and that's split between you and the seller, which saves you money. So Delaware makes a lot of their money off of transfer taxes and companies being incorporated in the state of Delaware. That's why they're able to have a low profit. And Rolf, how do you calculate the amount you qualify for? What's the difference between hourly when factoring in um, how much money you qualify for? So on salary, the person no, typically on salary no makes let's say example, a person makes $80,000 a year salary, and you divide that by 12 months. That person makes 6,666, let's say 67 cents. Um, that's regardless whether they work 40 hours or 50 hours in most cases. But let's say a person makes 50,000 and they work 40 hours. That's $2,000 a week times weeks is $104,000 a year. And you divide that by 12, that's $8,666.67. With the hourly and qualifying, when you give me your pay stubs and your hourly, I need to show that you're working 40 hours a week consistently. So if you give me a pay stub that's 35 hours and you didn't use 5 hours of PTO or vacation, and then you give me another pay stub that's 37 hours the following time, and then we get you pre-approved, and then all of a sudden you give me a pay stub that's 30 hours, that's something called variable income, which means you're telling me you're supposed to work 40 hours, but if you're not using PTO to make up for that 40 hours time, we're going to have to average your time, which if you were working 40 hours a week, $50 an hour, and you total out to make $104,000 a year, making $866.66, 67 cents a month, then we could use that as income. But if you consistently show me pay stubs that don't have 40 hours, then we have to fight down on your income. Now, on that $80,000 salary, if you work 30 hours one pay period, and you work 45 hours another pay period, and your paycheck says, "Hey, I made 60." Your paycheck says, "Hey, he made 66, $600 and 66,666.67 with $30 pay stub, a 30-hour pay stub, and 40, and you can use that income because it's salary. You work 50 hours, and if you're not getting more than that $6,600 a month, then we can utilize that. So when you're hourly, say you work 40 hours a week, you have to consistently show us that you work 40 hours, depending on the loan, whether it's FHA or conventional. So the biggest difference in the calculation is, hey, if you make $50 an hour and you show me pay stubs throughout the process where you're consistently having 40 hours a week, then we can use that income. If not, we have to average it, and that backs that down, because if you're constantly working less hours and you're not using PTO, or say PTO ran out, then all of a sudden you're no longer on pace to make 104, as to the person who works, whatever, and makes 80,000 a year salary. We can document that because it's consistent where they work 30 hours. For your mindset, I hope that answered. What's going on, Sheila? Just signing on, saying hello from North Carolina. Hello from the uh, tip. Pay your credit card before the statement date. Try to pay the entire balance, but if you don't do that, pay as much as you can. That's a great tip. That allows for you to pay less in interest, and it also allows you to utilize the credit card your rewards, your points that you're looking for. Those people are looking for these as an incentive, but not affect your credit score because the balance isn't over a certain amount because you paid. If you in fact do not get a chance to pay it off, I would advise you to keep your credit card balance somewhere between 30 and 10%. Um, Probably more so 10% to get the best use of your credit. Those are great questions. Free your mindset. Let me know if I answered your question, my friend. And thanks for the tips. So, yes, that tip was helping improve and manage their credit. So, struggles people are having with becoming a first-time home buyer. Aside from housing prices, housing prices are increasing. Um, they were increasing. We're starting to see prices dip on a national average, but real estate is regional and local. So you want to make sure in your area you have an understanding of what the market is like, or you have a good team. You say a team, you have a good loan officer, and make sure you have a good real estate professional. That is going to be a team. If you have the right team, their knowledge will help you along in the process. Um, Another huge struggle that I see first-time home buyers having or having in this market is them wanting to live in the best neighborhood, best school district, um, and also have everything that they want in their first home. Have their first home be their better. So you want to make sure that you're willing to be flexible. If you got $200,000, that's all you can afford at the time, then you need to understand, hey, I can get in to a home for $200,000, and yes, it's not my home that I really, really want, but it's a starter. So let's think back to what I said. The house that was $150,000, and all of a sudden it's 450. Now you're like, oh shoot, I wish I had purchased then. That same $200,000 house at is going to increase in value, no matter whether it's in not so good part of town or in a mid-grade part of town. At some point, it's going to increase if real estate continues to increase. Even if you purchase a home and you see a dip, you're still in that home, and it typically doesn't affect your payment. But at some point, it's going to increase in value. Let me give you an example. When the market crashed in 2008, 2007, 2008, as people start to see a decline in their home, they probably saw a decline in home values until maybe 2012, 13, you can even say maybe even 15. Somewhere or another in that time frame, we start to see a shift in the market. Homes were staying in the market for a while, but we began to see it slowly decline how long a house stayed on the market. So that person who purchased in 2006 and the value of their home, let's say they purchased in 2006 for 120, and then all of a sudden in 2008 it hit below 100,000 because homes were selling and there was fire sales. Then all of a sudden you have the market increasing after a certain period of time, and now you say, "Oh, now my house is worth 155,000 versus 125." And then if you kept that house, you continue to see the value of your home grow. i.e., we go from 125 to 450 in a specific period of time because of the housing market increase. And it's the same with stocks. Stocks continue to go down, and then at some point, as long as you stay in there, they go back up. I want you to, from here on out, I want you to take the mindset of an investor looking to purchase a home, because it is it's an investment in your future, and it may be the only way a lot of us attain any type of wealth or able to live to our families. So that's definitely a struggle. Um, so free your mindset. What part didn't I explain? How do you calculate the amount how do I calculate the amount you qualify for? So I take what free your mindset has. Let's see if I can go on the computer. Let me see. Mhm. Let me see. Share my screen. Shoot, that's gonna be hard. See. Calculator right here. Dang, I don't have my other screen on here. So I can do it because I do it all the time. So let's take that. Let's use round numbers. Let's take $5,000. Pull out your phone or calculator. $5,000 a month that you pay. Uh, that you pay for your that you make in income. We take what free your mindset makes in income that we can use to qualify. Use gross income. And then we pull your credit and we look at your debts. And we look at your debts to say, okay, what debts does free your mindset have that we have to calculate? So let's say your debts came to $1,000. So that's $1,000 worth of debt, right? So you take $5,000 and let's say you can max out on an FHA loan and you multiply that by 56%. That means your total debt to income ratio, including your current debts and your housing debt, cannot exceed $2,800 a month. We already know that you have $1,000 in debt a month that you pay out, not including rent, because as long as you're not going to continue rent, we're only going to count the debts that you have. So that means if you take away that $1,000 from that $2,800 that you can qualify for total debt, that means your mortgage payment cannot exceed $1,800. An $1,800 mortgage, depending on what part of the country you're in, is anywhere from 200,000 to maybe 225. Why I give you that broad range? Because if it's in Texas, then you have high taxes and high. If you're in Delaware, you've got low taxes and then moderate insurance. So your dollar can stretch further, but that's how we calculate it. We take what you bring in on a monthly basis. So if you're doing it, take what you make on a monthly basis, then we can calculate. Let's use 5 grand times that by 0.56, which is 56%, which is the back end debt to income ratio. We can go to 57, but I try to keep it at 56 to what you qualify for. That means all your debt, your back end ratio is $2,800. Now that means including your current debt. So you take away the $1,000 from that 2,800, and that leaves you an $1,800 a month payment. Now the part where I'm able to tell you it's between 2 and 225, that's just because I do it every day. But you send me, um, if you email me, I can send you a mortgage calculator. Email me at, I'm gonna put it in here. Y'all ask, some people ask for stuff and then they don't email me. That's the only way I'm be able to get up with you because I don't know your name and I don't have your email address, so I can't think and send it to you. So email me and tell me, hey, mortgage calculator, and I'll send it over to you. Or you can go online and just Google mortgage calculator and put that in. The difference is typically those calculators don't have the right calculation for taxes. It doesn't have the calculation for mortgage insurance. And it's not typically doesn't have the right insurance. I've got a calculator that we put together. I'll let you beta test and tell me how it functions. Now did I answer your question? What's going on, Mr. Clark? Happy Wednesday to you too. Sheila says the other struggle is they are not shopping loans before they look for homes. They need to get a good relationship with you to help them prepare themselves to buy in the future. Yep. So I did a video with Shahida, and we do, and they not just her, but people say, hey, shop your loans, make sure that you're getting the best deal. Sometimes the lowest interest rate in the best, like, yeah, it helps. And I said at the beginning of the video, it helps you with your payment. But if that person doing your loan doesn't know how to navigate through your situation, they can give you say they can give you a 5% interest rate, but if they can't close a deal, that's not what you can get. So I understand shopping around. I personally feel that come to me, I'm gonna give you the best service. I'm gonna give you the best price. I'm not gonna hassle and haggle. I'm not gonna say, hey, this, and that. Like I'm gonna give you the best deal up front. Shameless plug because I know what I do and I know my right. I'm not saying don't go shop because there may be something that my company can't do, but I will say people get frustrated because when they shop, they don't find what they're looking for. A lot of lenders won't do what I do. They will not give you a game plan. They will tell you, hey, Mr. and Mrs. Johnson, you don't qualify. Come see me in a year. Well, what do we do in a year's time? They're not going to give it to you because they don't shop. They want somebody that's going to be loyal to them. So check around, but you also got to be in position. If you come to somebody and you got a 400 credit score and you build it up to 580 and you can qualify because you got a 580, you can't expect the best rates of time because even though you're just good enough to qualify, unless you have uh, reserves and 401k or some type of money to the side and you get the bare minimum for so you can churn and burn and buy a house and go. Um, so shopping is a good idea, but also if you go to some of the online lenders, they, they can quote you a rate, but how thorough are they in the process? Have they asked you for all the information? So when you shop, I want you to do this. I want you to pay attention to what lenders ask you for. If somebody asks you for the bare minimum, which at the time you don't know, and then someone asks you for more information, I'm going to say, hey, why are you asking me for more? There's something that they see because we all need the same thing initially. 2 months of pay, 2 months of bank statements, 30 days pay stub, most recent 2 years of W-2 and 1099s. If you're 1099 or self-employed, most recent 2 years of tax returns, copy of an unexpired driver's license, social security card, passport. If you're here on a visa, front and back of your work visa. We all want the same thing. But if I ask you for something else and the other lender didn't, that means that I've seen something with that. Some things that I see and lenders don't ask for a copy of the student loan payment plan. or if you have one. Like they don't ask for that, and that's key because with all the rules and changes going on, there has to, but the guidelines on FHA, BA, USDA, conventional bank statement have not changed. Those guidelines have not changed. So the person doing your loan has to know how to navigate through that process. So with that being said, I have a book that I wrote, Student Loan Debt No Problem, How to Successfully Secure a Mortgage with Student Loan Debt. So a lot of people say, hey, I got student loan debt. I probably won't qualify for anything that's not true. It's a story in this book where I helped a family who had $800,000 in student loan debt. They were not rich, but they did what I asked them. They set up the proper plan, and they were able to purchase a home down in El Paso, Texas, so he could be closer to his father. So I've got a ton of stories in this book that are success stories with people who had student loan debt. And then I probably need to revise it at some point because I've got a ton more stories, especially now, where I've helped people with their student loan debt changing, getting their payments changed, doing three-way calls with them. So don't let student loan debt, struggle of having student loan debt discourage you. Do you do a fully underwritten pre-approval? In some cases, we do. Um, Not all, but when it's like tricky income, or someone has a short time frame or time span, they need to be somewhere. We do have fully underwritten rules so that we get the deal closed faster, or make it look more attractive to seller to take high competitive markets more on a high competitive deal price point. So yes, we do fully underwritten pre-approvals. Not all, but we can do them. So if you are just joining the live, I would advise you to go back to the beginning and listen to some of the struggles that first time buyers have. Also, I posed the question: what is a struggle that you personally are having purchasing a student loan debt? So if you're watching the replay, or if you're still watching it, or you just joined, drop in the chat, drop in the comments what some of your struggles are on purchasing home in 2025. Also, if you have any questions pertaining to home ownership, you can drop them. I'm here to answer them. Uh, so we actually, I'm gonna ask my buddy, Mr. Clark. Mr. Clark, if you're still here, what are a few struggles that you see first-time home buyers having once they're pre-approved? So they've come to me, and I've told them, hey, we have you approved for $400,000. And then you go to Mr. Clark and looking for a house. Mr. Clark, tell me if you could tell us what are some struggles you see buyers having once they have pre-approval and you take them out house. Um, so another struggle is being prepared. Being prepared with finances, even being prepared for the first steps. Those documents that I said you need to have, some people struggle with obtaining those documents. Like if you're listening to this video, or you're listening to the video now, or you're looking to purchase a home in the future, you need to be able to access your pay stub, your bank statement, your W-2, your tax return, your social security card, child support, VA benefits, um, social security, disability awards letters, annuity, 401k paperwork, any of that stuff that's needed, you have to be able to access. We can't take, and I've said it, I don't know how many times, we cannot take screenshots of the screen. You can't take screenshots of your phone. We can't take pictures of the documents. They have to be presented in a way to where they're professional. You wouldn't want me to, send you a screenshot of your mortgage statement, right? Like a screenshot of documents that we need because you're just like, wow, this isn't professional. We're looking for somebody to partner with us, and we want to make sure that you get us the documents in the form we need. And I harp on it because the underwriters will accept it. The screenshot may look clear on your side. By the time you send it to me, it looks somewhat clear, but it's kind of fuzzy. And when I upload it to the system and send it to the underwriter, he or she isn't going to be able to read it. So then they're going to kick out the file, and it's going to delay your closing, potentially delay your closing. They struggle to stay in their budget or under. They want more. It should be better to get less to put them in a good position financially, mortgage wise. That makes sense. And then he says they struggle to make big purchases, not to make big purchases before purchasing a home. Yeah. So I'm glad you brought that point up. Another struggle is that I see is okay. I can put this on a firm. I can put the Beyonce tickets on a firm. I can put the Beyonce tickets on Klarna. I can get this on Sizzle. I can get a payday advance. Like all these things don't show up on your credit, but when we get those bank statements, and we go and listen, we go line by line through the bank statement. We're going to see it. We're going to see it. And depending on how many months you have left, we're going to potentially have to count it into your debt to income ratio. You're potentially going to have to pay it off. Okay, let's say it's not much, but you just did it, so you didn't think we would see it, or you have anybody your credit or affecting your credit, taking on new debts. You still have to go back and get additional paperwork because we need to see what the balance is. I had people who don't know how to log into those accounts and see what the balances are. So, like, all of those things play a huge part. And again, like when you're purchasing a home, just be prepared not to buy anything. Food, and that's it. I mean, if you need some clothes, buy it cash. Don't put it on a credit card. Um, Try to wait until it's time to till after you close them. So we are 47, almost 48 minutes. Any additional questions about home ownership? I haven't seen anybody drop what your struggles are. So everybody out here in YouTube land that's watching this live, um, they don't have any struggles with purchasing a home, or you're just out there watching me and support me. I love the fact you support me, but I'd love if I could get some feedback because it helps me figure out what topics to cover, how to be more spot on, how to help people uh, when I am pre-approval. Um, Going once, maybe you guys are typing. So if you're new to the channel, do me a huge favor and give me a thumbs up so it gets pushed out to the YouTube algorithm. If you're also new to the channel, we have an amazing Facebook group that I would love to see you to join. And then we also have a news. If you subscribe to the newsletter, you will get a link to a budget worksheet that you can fill out and work with your budget. Whether you're good with money, you're trying to get better with money, you're bad with money, that budget worksheet is something that you can utilize, fill out, you and your spouse, take your bank statement, go through, take a look at what you're spending, what you have coming in, and that gives you a better idea of where your money is going, and that can help you learn how to save more money or put you in a better position. Say, hey, I didn't realize I was spending $400 a month on apps for TV, and I got cable or got direct stream. So that allows for you to get a better. The link to my newsletter will be below. The link to the Facebook group will be below. So definitely join. I'd love to see you guys in there. I'd love to get some feedback from you. For those who you're a part of my community, we appreciate you. Thanks for showing up for me. Continue to show up for me. Continue to support, and I'll continue to support you. Have you been seeing any struggles with buyers when it comes to closing if they have student loan debt? Yep. So I just had the conversation today. I asked the potential buyer, said, "Hey, do you have a student loan repayment plan um, set up?" She said, "No." I said, "When was the last time you talked to your student loan services?" She said, "They called, but I hadn't talked to them." You want to speak to those people. You want to make sure that you talk to them because you need to have some sort of payment plan set up. Even if it's in forbearance, even if it's deferred, it's better. Because right now they're reporting high student loan payments on your credit report. And if it's on your credit report and we don't have a document showing that it's something different, we have to account that in. For example, if she leaves the student loan debt the way it's looking on her credit report and not make that call, she does not qualify for the house that she's. If she does it, when I ask if she gets it changed, she does qualify and we can move. Because people had their loans forgiven by Mojito, and it's showing up in another credit report as if they were forgiving some people up closing. Happened twice to me. Wow. Um, so I have, I do the process different. Shameless plug. I wrote this book for a reason because I'm very, very knowledgeable about student loan debt. Very knowledgeable. I see it's a huge pain point, and I want to make sure I got this information out. Whether I'm the lender or someone's the lender, this book helps position you in a part of your journey to homeownership. It's on my website as well. But to answer your question, Devon, when I see student loan debt, I immediately say, what is the repayment? What is it? Do you have a repayment plan? Get me a copy. Get me a copy of the payment plan, exactly what it is and what I'm looking for. Because I understand the guidelines, I understand what they're looking for. I've had people who said, hey, they're forgiven, but they weren't forgiven. They got an email from whoever saying that the student loans were forgiven, but it was in fact like a spam email. The student loans weren't forgiven. Luckily, they were still in forbearance, so they didn't show up as late. So now we had to utilize a mortgage payment. So if you tell me that your student loans are forgiven, I need proof. I need proof that they're forgiven so I can show that to the underwriter. Um, and if you haven't talked to your student loan servicer, you need to get on the phone with them as soon as possible and have a conversation with them. I'm telling you now because there's a ton of people in that situation. The wait times are hours, hour and a half, depending on when you call and which company. I've had one person who we were waiting. The last piece was student loan, and we called 90 days late on her student loan debt. That was the only thing she had left. And we had to, hurdle we had to jump. And at that point, there was nothing we can do because her student loans weren't just one, it was like four or five. So each one of those had a 90-day score to the basement. So I see student loan debt, I panic, and I start asking the questions about. And sometimes I get people to say, "Hey, I don't." The other lender didn't ask for student loan paperwork. I said, "That's the reason why I'm asking because you're." The lender needed a letter from Mohila, but could not get it. It was they gave him the run. So the problem is so many things have changed with the student loans. Um, They really don't know what's going on in some places. Some loans that they say were forgiven weren't forgiven. I remember we all were supposed to get $10,000, $20,000 on your student loan debt, and if that's all the person had, then they thought it was forgiven. It's not. Like you right now, and I think I spent a lot of time talking about it last week or the week before. You're gonna have to pay attention to your student loan debt because they're coming for you. They are coming for you. They're going to go on your wages. They're going to try to get their money back because that is hundreds of millions of dollars that the government is on the hook for, and they want. I got time for maybe three more questions, guys, and then I got to jump. Thank you, Devon. Yeah, do me a favor, man. Listen, we got 10 people watching now. I need to, all you got to do is go to my page, click the thumbs up. Doesn't cost you a thing. Helps me put out more information, get pushed out to the algorithm. That thumbs up is an adrenaline high. And dopamine hit for me saying, hey, 10 people like my video. I'm coming back next. Um, but yeah, yep. Again, if you're new to the channel, hit give us thumbs up, hit the subscribe notification button. So do me a favor. Somebody sent me a message and said, "Hey, can you hit the notification button so that I know when you're going live?" I don't have that ability. You do. So when you subscribe, the easiest thing I can tell you to do is Google how to be notified on YouTube when someone goes live or puts out a video, and they'll give you instructions. It's an extra button that you have to press so that you get notified. Again, if you join a Facebook group or you join a newsletter, my email, your notification in the group, we're probably going to go to SMN texting, SMS, where we text you going live because I think 94% of text messages get read or delivered. Just a crazy. So we're going to go there. I'm not going to spam you for nothing. I just want to let you know, hey, I'm live. Come talk to me. I would also say closing costs pulls people up. Yeah, closing costs, down payment and closing costs are two big holdup. If you have depending on the market, if you have a knowledgeable realtor who can help negotiate some closing costs in, depending on your price point, that helps with the closing costs. If you say, hey, I've got $15,000 total, and you can qualify for a down payment assistance program, and let's say that down payment assistance program pays the down payment, then you can use that $15,000 for your closing costs. You can already expect it to use it. Um, there are sometimes, so like the couple I just talked to you about yesterday, they actually got back $1,667. So they got back, they put a $2,000 earnest money deposit back. And because of the way that we were able, the realtor and I teamed up and negotiated um, closing costs, he used a little bit of equity in the property, they actually got a check back. So, hey, listen, it's possible. No, it's not going to happen every transaction, but they actually came to closing with no money. And all in, they probably had $1,000 between, well, maybe 2,000. Home inspection, appraisal, and whatever was left from their 2,000. So, maybe 1,500, 2,000. I always like the videos. I understand the time and effort you put in. I appreciate it. I'm glad you do. I'm glad you do. I do it because I enjoy it. Um, I enjoy going live. My busy season is up in terms of sports through the summer, and now I can go live a little bit. Again, guys, thank you for coming out tonight. I appreciate it. You see, Mr. Clark. Thank you, and I appreciate you guys. Uh, I'm out here by myself. And any topics that you want to learn about or hear about from in the comments, whether you want to now or the replay. Also, most people not knowing that their possible monthly payment might be. I always suggest to ask the lender for a good payment. Yeah, you want to get some numbers so you understand what you're paying, because you might say, "Great, the houses I'm looking at $500,000. I'm looking for 500,000. That's exactly what I'm looking for." But if that payment is $4,500 and you thought you were paying three, that's a huge gap. So you want to make sure you're right, Devon. You want to make sure that you are aware of what your payment is going to be, what the estimate is going to be, um, and make sure you compare apples to apples or oranges. Like, lender might give you a lower interest rate, but the insurance quote that you get may be higher. I have my clients shop for insurance to make sure not only are they getting the best price, but I also want to make sure they're getting the right coverage. And sometimes what people have, the right coverage isn't the lowest price. They may have a gun collection, they may have a jewelry collection, some collectibles where they want to add it and it increases the policy. You may add a few things on that, hey, if something were to happen, because this happens in our area, that I'm covered, and I'd rather pay it up front now than to be paying a large lump sum later on. Yep. People looking at those Zillow monthly payments and they are not accurate because they're missing some data. So again, guys, thank you for the great feedback. Appreciate you guys. Do me a huge favor. Hit that thumbs up button. If you're interested in either one of my books, go to www.peopleslender.com and order my books, and I appreciate it, the support. Kevin Jefferson, the People's Lender.